Some CEOs are expecting 2 quarters of negative growth. Bank of America's CEO is expecting 3 quarters of negative growth. Hi guys, it's Stock Curry, and a lot of people have been asking me when the market would bottom out. So today we're going to talk about when the 2023 recession will end and when would be the best time to start buying stocks and crypto again. So let's get into it. Here's when the market is expected to bottom out. The stock market fell for a 5th straight day on Wednesday as traders are getting worried about the 2023 recession. Wells Fargo and Bank of America CEOs point to cooling consumer demand and Fed rate hikes, saying there is a slowdown happening. Over the past year, consumer spending was up 11%, but in November, spending rose just 5%. Bank leaders, with their bird's eye view of the U.S. economy, are providing evidence that the Fed's campaign to subdue inflation by raising borrowing costs is beginning to impact consumer behavior. That will have implications for corporate profits as businesses navigate 2023. Stocks trade based upon future expected earnings, and since the future earnings of companies are expected to slow down going into next year, stocks are starting to sell off going into next year, and they will continue to sell off until expectations for earnings turn around and start going back up again. One CEO said, "There is a slowdown happening. There's no question about it. We are expecting a fairly weak economy throughout the entire year of 2023. Both CEOs said they expect a recession in 2023, with Bank of America's CEO saying he expects 3 quarters of negative growth next year, followed by a slight uptick in the 4th quarter. Some CEOs are expecting 2 quarters of negative growth. Bank of America's CEO is expecting 3 quarters of negative growth. So sometime between the middle of 2023 through the end of the 3rd quarter of 2023, somewhere in that time period is when we can expect the stock market to bottom out. And another indication that a recession is coming up, and it's probably going to be a lot worse than people think, is the fact that used vehicle demand and prices continue to decline from record highs. The decline is good news for potential car buyers, but it's not great for companies such as Carvana that purchased vehicles at record highs, and they're now trying to sell them at a profit. Those worries caused Carvana shares to tank as bankruptcy concerns grow. Shares of Carvana fell by more than 40% on Wednesday. Shares are now trading well below $5 a share for the first time since the company went public in 2017. And this is unfortunately a sad fact of recessions, is that a lot of companies that we've come to know and love and expect to be the future of the U.S. economy, so many of those companies end up going bankrupt. During the dot-com bust, 60% of dot-com companies went out of business, and in 2008, 40% of companies overall filed for bankruptcy. This is just a reality of a recession, is that about half of the companies that are growth stocks that are currently unprofitable, half of them will end up filing for bankruptcy. That includes companies that have been around for a long time, as GameStop reports a decline in revenue and a sharp decrease in cash. As the recession worsens and fewer investors are willing to put cash into companies, this makes it very difficult for companies to raise funds. It also means that if they go out to get loans, they have to pay much higher interest rates because the Fed is raising rates. That spells doom for companies that are unprofitable, and it's why many companies, including GameStop, are on the verge of bankruptcy. Here's when cryptocurrency might bottom out. Cryptocurrency sold off sharply after the FTX fallout, but recently it has started to rebound a little bit. So is this the bottom for cryptocurrencies? I do not think it is. Cryptocurrencies during crypto winters normally have three distinct major legs down, and so far we've only had two. I still believe we have a third leg down in the cryptocurrency markets that I think is going to come next year. Now, I don't know what the catalyst for that would be, but I do believe that it will happen. Part of the reason is because cryptocurrencies very closely match the stock market. And as stocks sell off, cryptocurrencies will sell off also. The other reason is because if you look at the technicals, Bitcoin has very strong support at $12,500. We have not yet gotten down to that $12,500 level. So I still believe we have another major leg down before we hit $12,500. Once crypto does hit that $12,500 level on Bitcoin, that is when I think cryptocurrencies will have bottomed out. And just like stocks, we could see 50% or more of the current altcoin crypto projects go bankrupt and disappear over the next year. And if you think things are going to get much better for exchanges, think again, because regulators are clamping down. House Financial Services Chair Waters does not plan to subpoena Sam Bankman-Fried to testify at the hearing on the FTX collapse, at least not at this time. Waters invited Bankman-Fried to voluntarily testify before the panel. Bankman-Fried tweeted his answer to Waters, saying he felt that it was his duty to explain what happened, but it probably will not happen next week at the December 13th hearing. SBF tweeted, "Once I have finished learning and reviewing what happened, I would feel like it was my duty to appear before the committee and explain. I'm not sure that will happen by the 13th, but when it does, I will testify." Congress has also been asking the SEC to crack down on these crypto trading firms. Now, we know that probably one of the main reasons why the SEC did not crack down on SBF and FTX and Alameda is because Sam Bankman-Fried was kind of pals or kind of in cahoots with the SEC. And that is why with this SEC and SBF relationship taking place, that no crackdowns occurred. But it doesn't mean that the SEC is not going after any cryptocurrency exchanges. In fact, they're doing quite the opposite. SEC Chair Gary Gensler said cryptocurrency firms need to come into compliance with existing rules or existing regulations. Now, you may have thought that cryptocurrency exchanges were not under the regulation of the SEC. However, the SEC views cryptocurrencies as securities, no different than stocks or options. Therefore, the SEC regulates cryptocurrencies, or at least they try to, and they are now cracking down on cryptocurrency exchanges that are not playing by the same sets of rules that stock brokerages are currently playing by. Gensler told Yahoo Finance in an interview that the SEC has brought more than 100 enforcement cases in the crypto space. The SEC chief said cryptocurrency firms should be held liable for compliance with existing rules. His reasoning is that cryptocurrency tokens are securities. Part of the reason that the SEC was not able to go after FTX is because FTX is headquartered in the Bahamas. The SEC has successfully deterred other suspicious crypto firm activities, though. Gensler cited charges against Poloniex and Coinbase for unauthorized operations as examples. He said, "We brought actions against crypto lending platforms, including BlockFi, and we will continue to be a vigorous securities regulator. but I really do suggest to these intermediaries, these crypto exchanges, to come into compliance and work with the SEC to get into compliance, disaggregate these businesses. Disaggregate meaning to separate the crypto exchanges from the lending companies and to make sure that customer funds are not used for lending. Gensler said the SEC would take more enforcement actions if cryptocurrency exchanges do not comply. Of course, this only applies to cryptocurrency exchanges that are headquartered or licensed here in the United States. It does not apply to any cryptocurrency exchanges that are outside of the United States, such as FTX. And now, just 8% of Americans have a positive view of cryptocurrencies. Taking a look at the Cryptocurrency Fear and Greed Index, cryptocurrencies are currently in fear, although they were at extreme fear yesterday. Taking a look at the historical chart, this is historically where the fear would bottom out and people would start buying cryptocurrencies once again. The one thing to keep in mind about this chart, though, is that it only goes back to 2018, and all of the prior crypto winters were prior to 2018. So even though the Crypto Fear and Greed Index would point to this being the bottom for cryptocurrencies and now being a good time to buy in, the Fear and Greed Index has never had to go through an actual crypto winter before, so there's certainly some taking it with a grain of salt that must be done, since the factors may not be 100% accurate in this particular case. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will have an idea on when the market might bottom out as well. And make sure you hit the like button and subscribe. And if you want more information on what's happening in the stock market, make sure you watch the last video that I uploaded here.